welcome to Virtual Investor Conferences. My name is Scott Powell, President and Chief Executive Officer of Skyline Corporate Communications Group, LLC. On behalf of OTC Markets and Skyline Corporate Communications Group, we are very pleased that you have joined us for the Small Cap Growth Conference today. The next presentation is from ReVolve Renewable Power. Please note that you may submit questions for the presenter at any time. You may also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Myke Clark, Chief Executive Officer of ReVolve Renewable Power, which trades on the OTCQB venture market under the ticker symbol REVVF and on the CSE under the ticker symbol REVV. Welcome, Myke. You may begin.
Excellent. Thanks a lot, Scott. I appreciate it. And thanks, everyone, for taking the time to learn a little bit about ReVolve. I'll give a bit of a high-level overview of the company to start with, and then go through the presentation and wrap it up after about 20-25 minutes and take some questions if anyone has any. Again, as Scott noted, I'm Myke. I'm the CEO of ReVolve Renewable Power. We're a renewable energy independent power producer. We're essentially a power company that's positioned at the intersection of the energy transition as we experience it right now and the digital infrastructure boom, which I'm sure a lot of people have heard a lot about over the last six months to a year. At ReVolve, we have three things that we think are pretty rare in this space, particularly for a company of our size. We have a proven track record of developing, building, owning, and selling projects. We have operating cash flow, and we have a massive growth pipeline as well. The demand for our product, which is electricity essentially in one form or another, is unprecedented right now. AI, digital infrastructure, they're driving the fastest acceleration in North American electricity demand that we've seen in decades. It is definitely unprecedented. Every major jurisdiction that we operate in, Mexico, Canada, the US, are all facing the same structural power supply constraints and shortfalls because of that surging demand. And ultimately, our development capabilities and our geographic footprint position us perfectly and directly to take advantage of that demand. So when you take a look at ReVolve in terms of who we are and what we do, again, fast-growing renewable energy independent power producer, a power-first approach, meaning that we can do quite a few different things, not just develop projects, not just own and operate projects, but also move into the digital infrastructure space over time as well, which we think is obviously a pretty unique differentiator for us. We're involved in solar power, we're involved in wind power, hydro, so small-scale run-of-river, and energy storage as well. So some of the investment highlights that we see right now, clear inflection point for the company. We have quite a bit going on, as you'll see as we go through this deck. 25 new distributed generation projects that we're building right now in Mexico. So these are smaller projects that we build on the rooftops for commercial customers. We sell them electricity, so no upfront costs for them, but long-term power purchase agreements for us, so we generate long-term recurring revenue. We also have multiple utility-scale wind and solar projects at an advanced stage, and we have a digital infrastructure strategy that we'll touch on that targets the pretty quickly expanding demand for co-located clean power from AI and data centers. As you see, that nexus between power and AI is pretty interesting right now. We occupy a pretty neat space in that area. In terms of who we are, we have 13 megawatts of projects operating right now, generates about $2.5 million US in recurring long-term revenue. We have about 6 megawatts of projects that are in construction as we speak. And then we have a very large portfolio or pipeline of other wind, solar, and battery storage projects across North America that totals about 3 gigawatts or 3,000 megawatts right now. So pretty significant. So just to touch on some of the other recent milestones in terms of the investment highlights, one of the most transformative highlights was a few months ago, we signed a strategic financing partner. If you know this business, it is very capital intensive, not just from owning and operating and building the projects, but from developing those projects as well to get them to the place of either selling them or building and owning and operating them. So we signed a $40 million US convertible credit facility from a group called Callaway Capital. We funded 10 million US at closing, so we're definitely a well-funded entity right now. So that was transformative for us. We signed a final interconnection agreement for a large wind project in Mexico. And as you'll see, we have quite an interesting footprint in Mexico right now that's targeting construction ready in the very near term. We also have larger projects in Mexico that we're moving through a process as well. We signed a key interconnection for a Bright Meadows project in Canada. So that's a 16 megawatt project. Again, critical step on the path to construction, those interconnection agreements. And then we are rapidly expanding that distributed generation portfolio in Mexico right now, more than 5 megawatts under construction with significant more upside available to us through the partnership that we'll describe. So the market opportunity, I touched on this off the top, where does the demand come from for our product, which is electricity, data centers, electric vehicles, energy security, manufacturing, so nearshoring or onshoring of manufacturing, both in Mexico, the US, and in Canada. It's definitely a changing environment, but it's essentially the electrification of everything that we're seeing right now that is creating demand for power projects across the board, and that's what we do. So if you take a look here, this is really where the value in the company is in terms of our development pipeline and our operating pipeline. You'll see the blue projects there in Canada and in Mexico are operating right now, generating that recurring revenue under long-term contracts. We have projects that are in construction in Mexico right now. And then we have a couple hundred megawatts of advanced stage projects in Mexico, the US, and Canada. And then more than a couple of gigawatts of projects of mid-stage and early stage projects across North America. So as we go through the development process, which starts with acquiring land, securing land, doing some of the work on developing a project, meaning assessing the resource, be it wind or solar, going through the interconnection process so that we can secure interconnection and get the product to market, basically, which is electricity. Those projects move up that sort of that ladder and increase in value as well. We have sold projects in the past. We've sold very large projects to multinational firms in the past. We've sold smaller projects as well. So a lot of experience over our history in terms of developing projects and also selling projects to larger developers. And so if you look at that track record, we were a private company for about 10 years, 2020 or 2012 to 2022, and went public in 2022 and have been obviously public ever since, but have a long history of developing projects to a certain stage and then selling them to larger players for milestone payments. When we went public, we realized that we really wanted to expand that business model to include not just the development and sale of projects, but also owning and operating projects long-term, becoming an independent power producer. And as you'll see, we've done that over the course of a pretty quick 2 to 2.5 years, where we acquired some projects, and then we've also built projects of our own that are getting into operation. So when we look at our approach, some people will say, look, you guys are operating across quite a few different jurisdictions. You have different sizes of projects, different technologies. Why are you doing so much for such a small company? And at the end of the day, what we do is pretty straightforward from a development perspective. And there's really no reason not to develop solar and wind and battery storage, because the initial stages of development are very similar for some of those projects. It's acquiring land, it's getting them into interconnection, doing the resource assessment. So from our perspective, we're technology agnostic in that we see value depending on the project site and the jurisdiction, from developing wind and solar and BESS or battery storage projects across the board. From a size perspective, why not develop just small projects or just large projects? Well, at the end of the day, developing a 50 megawatt project or 100 megawatt or 150 megawatt project can take a lot of the same sort of resources and costs, and there's really no reason not to develop all of them. the key comes, the key point of a decision point comes when you decide what to do with those projects as they get to an advanced stage of development. And so for us, that delineation line is 50 megawatts. Where anything under that, we look to develop it in order to own and operate it. So build it ourselves on our balance sheet and sell the electricity. Whereas projects over the 50 megawatt, really from a size perspective, because of our balance sheet, we wouldn't be able to build a multi-hundred megawatt project right now that would cost a couple $100 million in capex. So we continue to develop those, but look to sell them, and then we receive milestone payments for those. And then underlying all of that is M&A, where we look to acquire either operating assets or development stage assets that meet our hurdle rates or deliver good, strong returns. And we see a lot of opportunities in that space right now, especially for smaller projects, because oftentimes they become orphaned in larger organizations, or there's just not a lot of interest. Whereas for us, they really move the needle in terms of adding those onto our development and or operating pipeline. So this is a bit more detail about why we break them down in terms of that under 50 megawatts, over 50 megawatts, develop and sell, develop and own. It comes down to sort of a revenue stream profile, but also a timeline to that revenue. The bigger projects, not surprisingly, take longer to develop, and the smaller projects are quicker to develop. And so that's great. We can develop smaller projects, get to cash flow quicker, whereas the larger projects, they take longer, but you do see larger lump sum payments from a milestone perspective. So it really makes sense from our perspective, to integrate them into a hybrid model, develop them all. The smaller projects right now, though, develop to build and operate, and the larger projects develop to sell. So here are the projects, some of the projects that we own and operate right now. So 13 megawatts operating, wind, hydro, distributed generation. Those are the types of off-takers or customers that we sell electricity to. So the city of Medicine Hat. So for a lot of people in the US, this is in Alberta and Canada, in southern Alberta, very close to the border, where we sell power to the city. The run-of-river hydro projects in British Columbia, we sell to the Provincial Power Authority, BC Hydro, under long-term contract. And then some of these projects in Mexico, we sell the power, at least, to smaller manufacturers, department stores, that type of thing, under long-term power purchase agreements again. So a variety of different offtake customers, but all under long-term power purchase agreements. And those are some photos of the actual projects themselves. So again, we are an operating entity. We operate a project in Alberta that is 6 megawatts, the run-of-river projects in BC. And then the project there in Colima in Mexico is very typical of what we would see from a distributed generation solar project. Again, put it on the rooftop, we install it or manage the installation of the project for a commercial customer, and they buy electricity from us, and they essentially lower their operating costs, lower their OPEX without any upfront payments, and we see a good return, essentially sharing the savings from what they would normally pay their utility company. And so the develop and own pipeline, we continue to build that out as well, and we continue to see larger and larger projects that we're targeting in terms of ownership. The Bright Meadows project in Alberta that you see there is at an advanced stage of permitting, has gone through all of the key permitting. We're looking and trying to assess power purchase agreement opportunities right now. So that's 16 megawatts. So it would be a nice jump for us for sure if we could get that into operation. Obviously, we operate 13 megawatts right now, and a couple of larger projects in the US, both on the wind side and the battery storage side. And then in Mexico, across that distributed generation portfolio, we have quite a large development pipeline there, where we're negotiating or discussing with potential customers, be it department stores, manufacturers, you name it. Anyone that's looking to reduce their electricity costs is something our customers that we're essentially talking to. On the develop and sell side, we've had quite a few projects that we've developed to a stage and sold. One of the most interesting ones was a package of projects in Arizona called Bowes and Parker that we sold to NG in 2023. And we've received to date just under or just over 6 million US in the milestone payments for that. After having developed or spent about $1 million, give or take, a little over $1 million on developing that project. So really good return to date. But the total sale price still includes another 40 to 50,000 a megawatt, which are significant milestone payments over a gigawatt project. And so those are dependent on NG moving forward with the project because they're milestone based. So those would be at construction start and commissioning. So some uncertainty obviously around timing around that, but still we're definitely optimistic that those projects are going to move forward. They're pretty attractive projects. And almost as importantly as the sort of quantum of capital there is, what this means for other projects in our pipeline. Can we sell a project for $50,000 a megawatt? Absolutely. Like we are looking to develop them to a stage where we can monetize them at that level or higher. And if you look at, some of the projects in Mexico right now, which are advanced stage, 130 megawatts, 400 megawatts, these are all projects that have that significant embedded value in them of that $40,000 to $50,000 a megawatt that we target in terms of sales. So real significant opportunity there in terms of upside. So I wanted to talk a little bit about digital infrastructure as well. Obviously, everyone hears nonstop about AI and the demand for digital infrastructure, and probably importantly for us and for our investors is the demand for the power associated with these types of projects. The constraint now is clear. Obviously, there are constraints sometimes around chips and things like that on the technology front. But generally speaking, the constraint now is power, interconnection, and really that is where we fit into the mix here. So we take a power first approach, to these types of projects. First and foremost, we've looked at our entire portfolio of projects, those 3 gigawatts that we had mentioned before, and say, look, are any of these sites that could potentially house a data center? Are they something where maybe a smaller data center could be implemented? And we've definitely seen some opportunities there within our pipeline, but also for new projects as well. When you think of what we do right now, we do site acquisition and site assessment. So that is securing the site that usually has a good resource, be it solar or wind, has good access to transmission, and hopefully transmission that has capacity on those transmission lines. How do you interconnect? And so as we do that analysis, this is the same type of analysis that any data center would do as well. But they include things like access to fiber, potentially access to natural gas, because you could include natural gas power solutions within that sort of microgrid solution as well. And what data centers are finding, generally speaking, is that they're constrained in terms of the power. And so can we, as a developer and a power company, put together that kind of really interesting mix of deliverable power quickly so that people can move in and start building these data centers? And I think the answer from our perspective is yes, we can do that, and we're looking at those opportunities right now. But we're not looking at hyperscaling. So we're not looking at the gigawatt sized or scale opportunities right now, because I think there are a lot of players in that space, and they are challenging, and people do that very well. But for us, we want to focus on the types of projects that we have already demonstrated we can develop and build and own and operate, which are smaller projects on the renewables side, but also that really fits in well with smaller data centers. So still tier 3 GPU as a service type data centers that are still selling compute, and they can get up and running faster. And those are the types of opportunities that we're targeting. And for us, the question becomes one of, like with our that 3-pillar approach to renewable projects, very similar with data centers as well. Right now we're looking to develop the power solution for these types of projects, but ultimately, could we own and operate data centers? I mean, that's definitely a possibility long term. Smaller, these smaller data centers that have modular systems, so we can drop modular systems into them and get them up and operating quickly, is a real interesting area for a company like ReVolve, because it kind of fits into our sweet spot, without a doubt. So stay tuned on all of that. All that to say is that data centers AI is driving the demand for power significantly now in the US, Canada, and Mexico. And we're definitely at the right place with respect to being able to take advantage of that demand for power. So I'll talk a little bit about M&A as well, what we've done historically. We've acquired a few different projects, operating assets and development stage assets over the years. A couple of them here in Canada that form part of that 13 megawatts. That development stage asset in Alberta that is now late stage. We acquired it at a very early stage, brought our expertise to bear, moved it through the permitting process, and moving it through the final interconnection process as well. We continue to assess the proposed acquisition of about a 10 megawatt operating wind project in the US, something that we announced back in April of 2025, so quite some time ago, but it's still live in terms of the assessment of that. And really what we're looking to do is sort of solve for the equity requirement on our part. And obviously now that we have done that deal on the strategic investor, this has bubbled back up. So we're looking at this and potentially other, targeting other, operating assets in key markets now that we're fully capitalized, because we see real opportunity that there are developers out there, there are operators out there that are looking to sell these types of smaller operating assets, because not because the assets aren't good and generating good returns, but because they may be orphaned within a larger organization, or they're in a jurisdiction where perhaps these operators don't want to operate anymore. And there's not a lot of companies out there that are looking to acquire these. Excuse me for that. So we're definitely in the market and looking at other opportunities on that front. A bit about the management team. I joined ReVolve about a year and a half ago, a little over a year and a half ago, after running an EPC company, a solar EPC. So built projects in the US for commercial industrial customers. Our two founders of the company still intimately involved. So Steve Dalton is the executive chairman, one of the founders. I took over from him as CEO, but he still works in the business day to day. And Omar is based in Mexico. So the company was actually founded back in 2012, primarily in Mexico, because they were both doing work in Mexico and saw a real opportunity to establish a land position in Mexico. And that's why we have a really good, strong team based out of Mexico City and Vancouver, which is where I'm located with Tanya, our CFO. So a good, strong, diversified team across the three jurisdictions. And then on the board of directors, we have a couple of founding shareholders, and Joe and JP, and then Powers joined us from Callaway, that group, the strategic investor, and Susan and Craig have both been involved for quite some time with us as well. So a really good, strong board for a company of our size, I think. And some shareholder information there. Capital structure, 83 million shares outstanding. Warrants, options, all at 40 cents. Have been listed in Canada since 2022. So pretty tight shareholding, about 35 to 40% insiders, with over 50%, call it friends and families, like really close shareholders. So pretty tightly held. And I'll leave the information, the contact information on there right now, and then sort of jump over to some of the questions as well, because I see definitely a few of them coming in here. Let me just make sure I've got this. Start off with a question about the DG customers in Mexico. Are they multi-site or multi-year frameworks rather than just one-off projects? Good question. So they are definitely not one-off projects for the most part. Some of the ones we acquired previously were one-off, but multi-year. So all of these projects we own long-term. We sell electricity under contracts that are usually 10 to 20 years. The ideal customer definitely is multi-site from one off-taker or one customer. And the ones we're building right now, so we have 25 that are essentially under construction. 16 are with one customer, 9 are with one customer, multi-site, multi-year. Those are definitely the ideal customers for us as we sort of build out that piece. On DG again, as the company's proven we can expand DG and advance utility scale projects and secure capital. What's the next step change milestones you're working towards? Get this question a lot, definitely. I think the next step change for us is there's probably a couple, and they include executing on the sale of larger projects or partnering on them, including the large projects in Mexico, and then getting through potentially if it closes, the acquisition of that 10 megawatt project in the US and other potential acquisitions that we're looking at. So there's not going to be one event that is like, boom, all of a sudden we go from a 13 megawatt operating company to 100 megawatts. What you're going to see is consistently hitting milestones over the course of the next 6 months to a year, where we potentially acquire operating assets, build out that recurring revenue stream, continuing to build out the DG portfolio of operating assets, and simultaneously monetizing the larger projects that we're developing as well. So we've taken a real a diligent approach to how we want to expand this business, and it is through those sort of key areas: acquisitions, continuing to build out the DG portfolio, and develop and sell those larger assets as well. So you would definitely see news flow as we go through that period of time as well. With the board now including deep capital markets and project finance experience, do you feel better positioned to maximize outcomes on potential large monetizations? Yes. I would say less about the board representation, although that's very important, but definitely having the balance sheet and the cash available to develop projects to a later stage. Earlier stage projects, you sell for less, not surprisingly. The more you can develop and create value in a project, the larger the monetization. So absolutely, we're doing that now. Bright Meadows, so that's the Canadian project, fully permitted, targeting construction once built. How much will that project alone move the needle on installed capacity and recurring revenue? So installed capacity, recurring revenue, I don't know off the top of my head, we have disclosed it, but so I just direct you to some of our news releases about the potential for that in terms of recurring revenue. But that is a 16 megawatt project, and so we would look to own and operate that 100%. So assuming that comes online, whenever that comes online, in our current installed capacity, that would more than double our installed capacity. On M&A, we've integrated DG acquisitions, Wind River in Canada, which is where we acquired the projects that are operating right now. How robust is the current pipeline of similar bolt-on deals that you could accelerate your operating megawatts and EBITDA over the next 12 to 18 months? There are a lot of opportunities in the M&A space for these sizes of projects that we're seeing. And so we're assessing quite a few. It's fair to say right now, obviously the most imminent one is the one that we have disclosed publicly, that 10 megawatt project in the US. So there is a really strong pipeline of potential projects. Obviously, whether any of those gets executed, we'll have to disclose that as it comes up. But we see real opportunity for those bolt-on acquisitions the next 12 to 18 months. Are you starting to see better pricing in terms of power because regulators and off-takers recognize how tight future supply is coming? Yes, definitely. Power prices are going up. And for us, on the PPA pricing side of things in Mexico, we're definitely seeing better pricing for us and better margins for us. We're starting to see that in the US as PPAs start to integrate all of these pricing. So long term, without a doubt, power prices are only going in one direction. Finally, Execution risk over multiple jurisdictions. Really good question. Would be happy to follow up with anyone on any of these questions that didn't get answered afterwards. If you want to give me an email there. But execution risk, we've been operating in all of these markets for quite some time now. So we have a really good, strong team in place, but happy to go into more detail on that with anyone as needed. And with that, I think we're wrapping up here. So I just wanted to thank everyone, and feel free to give me an email at Myke, Myke, yes, it's an odd spelling, at ReVolve-Renewable Power, and appreciate everyone's time.